Welcome to this video. During the past weeks, I have been closely observing the Chinese economy and looking at the big picture to pinpoint the way these events will impact China and the rest of the world. The Chinese economy has been engulfed in the flames of stagflation already, and the way current events are unfolding paint a very depressing outlook of the Chinese economy. The magnitude of these shifts will not only impact the Chinese economy, but the resulting disruption of global supply chains of some of the world's largest companies will have long-term consequences for their operations and profitability. In this episode, I will highlight some of the key developments in this regard. I will cover number 1, the way Chinese regulators are literally obliterating their markets with the Chinese tech giants leading the pack during this chaos. And we will cover the way investors in the rest of the world are responding to these developments. Number 2, the Chinese real estate sector which is imploding. Number 3, another wave of widespread outbreak of COVID-19 and its consequences for China. Number 4, food shortages in China and the way Chinese government is responding to it. And number 5, in the end, we will cover stagflation in China and its implication for the economies around the world. So first, let's have a look at the way Chinese government is literally shooting itself in the foot by becoming a hurdle in the growth of its companies. The Chinese government's innate desire to control and regulate is manifesting itself in ways that I had never imagined. So the reason behind the annihilation of Chinese tech stocks is not because of their ability to innovate, competitiveness, or value proposition. The reason is the obsession of Chinese regulators to make strict rules and enforce them, even if it is detrimental to the growth of their companies, which employ thousands of people in China. So firstly, the US regulators threatened to hurt Chinese stocks by delisting them, and if that was not enough, Chinese government joined the party and brought the aggressive regulations and fines to the table. And as a result, the investors paid the price with uncertainty, the resulting dynamics triggered by fear, and most of all with nerve-crunching price meltdown that has thrown their hard-earned cash to shreds. And if you think that Chinese government won't continue along that path for long and this is something just temporary, think twice. I believe that this is something which is here to stay. And the most depressing thing about the whole episode is that the main target in the crosshairs of Chinese authorities have been their most innovative and largest tech companies. And the aftermath of these actions is that the confidence of investors has evaporated and those who had invested before are dumping Chinese stocks now. So of course the underlying reason is regulatory uncertainty. So China has introduced a slew of regulation in the past few months, in part aimed at the tech sector. A move that spooked investors and wiped out billions of dollars in market value from the country's internet giants. And if you think that, oh, these might be mostly retail investors who are crazy, they are emotional, they don't have the experience to invest wisely, and when the fear is high, they should be instead buying, please look at these things from another angle and pay close attention to what the most experienced investors in the world are doing. For example, just look at Cathy Wood of ARK. She has dramatically cut the exposure to China after Beijing's crackdown on business. And a few weeks back, Chinese regulators summoned Tencent and other gaming companies, and that is just the tip of the iceberg. And now let's have a look at the imploding Chinese real estate sector. So many big developers in China are lined up in the queue for default. We know about Evergrande, which is under 300 billion US dollars in debt and made the payment just ahead of deadline to avoid chaos. And now another Chinese builder, Kaiza, has missed the payment. So the list of Chinese builders under humongous debt is long and they are defaulting one by one. As this turmoil continues, the local governments are not able to sell the plots of lands at premium prices, and majority are even going unsold since the developers are now very risk averse in these turbulent waters. So this big source of their revenue is eroding fast as the plight of developers continue. The local authorities are also under heavy debt due to years of bad investing decisions, and with this vital source of revenue slipping out of their hands, they are going to face big financial pressure in the near future. And now we look at yet another wave of widespread outbreak of COVID-19 and its consequences. For those of you who are new to this channel, I am Dr. Subail Khan from Subail.com, And on this channel, my endeavor is to help you in making your money work harder, smarter, and in long term. So there is another huge outbreak going on in China right now, and the Chinese authorities are taking strict measures as it battles the most widespread outbreak since Wuhan. This resulted in fresh lockdowns in China as COVID-19 infections spread to 11 provinces. The ongoing outbreak began on October 16th when infections were detected among a tour of fully vaccinated senior citizens from Shanghai traveling in North China. Cases quickly ballooned and spread across the northern provinces. By the following week, officials from National Health Commission warned of multiple scattered local outbreaks in the north and northwest that were expanding rapidly. Authorities immediately jumped into action following the playbook that has successfully contained previous outbreaks. These actions include mass testing, snap lockdowns, quarantines, travel suspensions, and vigilant surveillance. So more lockdowns mean most of the workforce won't be able to work in factories, which will eventually cause more supply chain disruptions and economic turmoil for both China and the economies in the West and USA that carry most of their manufacturing in China. And honestly, in West and USA, we are increasingly becoming consumers in totality, meaning I won't be surprised that in near future we will be producing even fewer things that will be a fraction of what we consume, and the only thing we will produce in abundance will be fiat currencies. And now let's have a look at the food shortages and how is the Chinese economy affected by that. So the vegetable prices in China have soared after heavy rains swamped the crops. And Chinese authorities are telling families to stock up on food and other daily essentials as bad weather, energy shortages, and COVID-19 restrictions threaten to disrupt supplies. However, some people have a totally different opinion and they believe that the intent of Chinese government is to attack Taiwan and annex it. But this is something which we cannot say with certainty and conviction beforehand. Anyways, the point is that rising prices will definitely have an impact on millions of people in China, and with lockdowns in place, it will have implications for the global supply chains of many multinationals, and we will see more supply disruptions in future. And now let's have a look at the Chinese stagflation and its implication for the world's economies. First, we have to answer the question, is Chinese economy really in stagflation? Personally speaking, I don't have a slightest of doubt that the Chinese economy is tangled in the chains of stagflation, and as a result, the prices are hiking while the production is slowing down. So for those of you who don't know, stagflation is when the economic activity across various sectors show the signs of stagnation, while at the same time the inflation is accelerating. And you don't have to take my word for it. Look at that. Many experienced economists have warned that. So China's factory activity contracted more than expected in October, shrinking for a second month. An official survey released on Sunday showed the last October manufacturing data shows low production and high price inflation, economists say. And a worrying sign is the pass-through of inflation from the input prices to output prices. The input price inflation has been high for many months by now, driven by the rising commodity prices. And of course, it is validated by the Chinese Manufacturing Index. So a key indicator of the health of the Chinese economy, the Purchasing Managers Index PMI contracted. So analysts say the indicators of stagflation in the Chinese economy are there. And now let's diagnose the effects of Chinese stagflation on the economies of the rest of the world. As China is taking its dose of stagflation medicine, in this connected world where many multinationals have a global footprint and supply chains, we can see the effects of Chinese stagflation permeating across the globe. And as a result of stagflation in China, many countries across the world are facing longer supply shortages as the Chinese factories are squeezed due to the combination of higher input prices, uncertainty about export prospects, and a weak recovery in domestic consumer demand. Also, the surging prices of raw materials are obliterating the profits of many manufacturers in China, and with so much uncertainty, most of them are not willing to expand capacity. This year, Chinese sprawling manufacturing sector has been tested by COVID-19 outbreaks, higher costs, production bottlenecks, and more recently, power rationing. A power crunch triggered by a shortage of coal, tougher emission standards, and strong industrial demand has led to widespread curbs on electricity usage, hurting factory output. And as a result, many firms could not meet their sales targets. Just look at Apple, one of the world's largest and most innovative companies, is not immune to the adverse effects of these supply chain issues. So Apple revenue fell short of Wall Street expectations in its fiscal fourth quarter on Thursday, which Apple CEO Tim Cook attributed to its larger than expected supply constraints on iPhones, iPads, and Macs. And it has cost Apple $6 billion US, which is enormous. So I believe that China is facing several challenges simultaneously, and it won't be anything less than a miracle if it overcomes all these challenges which have shaken the very foundations of its economy and businesses. Now here are the key points which provide a condensed overview of everything which we covered today. Number 1. Chinese government is digging its own grave by becoming an adversary of their companies and imposing tighter regulations on them. Also, by taking measures that impede the progress of their businesses will have adverse effects on the Chinese economy in the future. And secondly, the Chinese real estate sector is imploding, and it has far-reaching negative consequences for the builders, the local governments, and investors. One by one, the builders are going bust, and there seems to be no end in sight. And thirdly, the second wave of COVID-19 virus in China has been catastrophic for the economy and has led to stagflation by bringing the manufacturing firms to a standstill. Also, China is faced with food shortages which has severely impacted the livelihood of people. China is urging families to stock up on food as supply challenges multiply. With a huge stockpile of uncertainty already in China, this is yet another dimension of stress which many Chinese people must deal with in the current times. And lastly, the stagflation in China is already here and has caused supply chain disruptions, which is costing many global firms billions of US. This is indeed a big blow to many companies in Europe and USA who rely on Chinese manufacturing. So everyone, that was a quick wrap up of what is happening in China today. In my opinion, China is undergoing massive shifts across several fronts in its economy and markets. My goal was to capture a holistic macroeconomic view of the whole situation and also share that with you. I hope that you liked the video. Please let me know in the comments below. What do you think about the situation in China currently? Do you think that things will recover faster? To all my wonderful viewers who have watched this video, I am really grateful for your time and I will see you in the next video. Bye.